A decision is a judgment one makes after thinking about the best thing to do. In layman's terms, a decision is a choice that spurs a course of action. According to Dr. Joel Humans, professor of management and leadership studies at Robert Wesleyan University, the average person makes upwards of 35,000 decisions per day. Now that's a lot of room for error and variance. Two performance killers for active traders. Now imagine that you're trading the E-mini NASDAQ on a 1-minute chart, dealing with a literal avalanche of fundamental, technical, and price action data. If the normal person makes 35,000 decisions per day, the active trader make upwards of 50,000. Make no mistake, for active traders, decision-making is everything. In the markets, decision-making equals money. It's real simple. Good decisions preserve and grow capital, while bad decisions cost money. The difference between your success and failure as a trader is a function of how many more good decisions you make than bad. Now, the financial realm is littered with rags to riches and riches to rags stories. The root of each is decision-making. Day trader Takashi Kodagawa began with a modest $13,600 stake, which he grew into $153 million in 8 years. Why? Solid decision-making. Kodagawa consistently implemented a structured swing trading strategy based on divergence. It was a good move. On the other hand, James Corger in the OptionSeller.com meltdown is a classic example of bad decisions and actions. Option sellers took naked short positions against natural gas, assuming unlimited liability with astronomical leverage. Natural gas spiked 60% in just over a week, leading to more than $150 million in losses for the hedge fund. Bad decision making. Real bad. To win in the markets, you must make good decisions. To do that, let's look at the mechanism by which strong choices are made. Most people believe that they know what a decision is, but there's a little more to it. The University of Massachusetts Dartmouth has broken it down into 7 steps. This process illustrates what's behind a strong decision and satisfying outcomes. All right, let's take a look at it and how it relates to your trading. Number 1, identify the decision. This is huge. To make good choices, you need to know what choices need to be made in relation to your needs or goals. In the live market, the trader has 3 alternatives at any given time: buy, sell, or stay out. Either can be right or wrong, but identifying where opportunity lies is vital to profit. Number 2, gather information. Research. This means we have to compile our technical and fundamental data facing a potential trade, evaluating the economic calendar, your indicators and tools, etc. Number 3, identify alternatives. We must ask, is there a superior course of action? Perhaps a better trading opportunity exists? How about a market or a better time frame on which we should focus? Number 4, weigh the evidence. Compile your information and emotions and determine what pursuing each alternative to its end would mean. In the markets, this is a question of opportunity cost. Will taking a certain course of action compromise your goals or needs? Could one trade setup be especially satisfying? Number 5, choose among your alternatives. After evaluating all of the evidence, it's time to select a course of action. So which trade are you going to execute? Which opportunity are you going to cash in? Number 6, take action. It's time to implement the decision made in step 5. It's time to take the trade. Number 7, review your decision. This final step consists of evaluating the results of your action. Was the outcome of your action positive or negative? Were your needs or goals met? Was your trade a winner or a loser? Step 7 is critical. This is where we learn from our mistakes and review our choices objectively. For traders, this is the part where we get better. Okay, let's take a look at how the decision-making process plays out in the live market. Let's go through our progression. Number 1, let's identify the decision. Right now, we're in the middle of the United States trading day. I like trading the U.S. indices because they're alive. There's lots of price action. We're looking at the NASDAQ right here, E-mini NASDAQ on a 30-minute chart. There's a lot going on here. So is the decision to trade or not to trade? This looks to me like a tradable asset. Number 2, let's gather information. We look at our technical indicators in our news cycle. Number 1, there's a lot of participation in the market. Number 2, my indicators say that this NASDAQ has broken out. Now, right now, it looks to be tradable. Number 3, identify the alternatives. What else could I be trading? Well, I mean, crude oil is a little bit flat. The U.S. dollar is a little bit flat.
Gold's flat. The other indices look pretty good, but they don't have as much volatility. So right now it looks like I'm in the right market. Number 4, I've got to weigh the evidence. What's telling me to trade? Well, right now we have a nice 30-minute breakout on the NASDAQ. It looks to me like we want to be bearish as opposed to bullish. Number 5, choose among the alternatives. We have all those different choices to trade. Gold, crude oil, they're kind of flat. The other indices, the S&P 500 and Dow, they don't have as much price action or participation as the NASDAQ. Looks to me like we are in the right place once again. Now it's time to take action. What are we going to do? We're going to dial in our leverage, and we're going to just go ahead and take our short and sell the market. So bang, we're immediately short. And number 7, we're going to review the decision. Was my trade location very good? Not too bad for an intraday trade. We're trading in the midst of a breakout. We do believe that we've picked the right market at the right time, and we believe we're the right way. Only time will tell if this trade turns out to be profitable, but as of right now, it looks like we're on the right side of the ledger. So that's a good look, 1 through 7, our decision-making process and how it applies to the live market.
There's a big difference between good and bad decisions. In life, it's the difference between the penthouse and the unemployment line. In the markets, it's the difference between making money and blowing out your trading account. The bottom line is this: good decisions make money, bad decisions lose it. Remember that strong decision-making is easy. Follow the 7-step process and you will make consistent, structured choices over the long haul. When dealing with the dynamic mysticism of the financial markets, that is a key aspect of cracking the financial success code.